Welcome to the Octagon. Hey guys, it's Keith Allen, and yeah, this pattern looks a little different, right? Last night I'm staring at charts and trying to figure out, maybe get some different perspective, looking at different charts and different indicators, trying to see if I can find something new, more clues. And what I decided was and originally I drew a square into this range of interest of where I thought all the action is going to happen and play out here over the next couple of days, or a few days rather, as we work our way into the monthly close. And I decided that this was like a cage match between bulls and bears. So I drew the octagon here, and it actually kind of aligns quite nicely with the range of interest that Bitcoin has been trading in. As you can see at the moment, it looks like we're trying to break out of this range, but yesterday, this breakdown below that 2021 top was what I considered an invalidation of the breakout attempt. We now have reclaimed that level. Importantly, the 21-day moving average held here. So that was a sign of strength from this level, but we still have yet to consistently print full candle bodies above this 2021 top at 69K. And until that happens, we don't have a confirmation on this RS flip, resistance support flip, for those not familiar with the term. So I told you I was looking for some different things, and I started yesterday on the monthly chart last night, just trying to look for anything different that gave me some clues. And the first thing that I noticed here was that we have a trajectory here that sets us up for a golden cross between the green 21-month moving average and the 50-month moving average. And those will play out as we move into this next candle here, right? The April candle coming up. This is the halving, by the way, coming up in mid-April. But much of this move, obviously, with moving averages being lagging indicators, much of this has played out in terms of the upside move. But typically when we see these crosses up or down, they tend to trigger algos. So we could see some additional momentum with that before a potential reversal of some kind. Or we just continue to go up. Who knows? We'll see. So that's one thing I'm looking at. Of course, I'm also very interested in the monthly close, which last month closed around that 61.1 level. I think that there's a reasonable possibility that we could retest that prior to the monthly close. We often see some volatility around these events, and as you can see on fire charts, we have some opportunity here, right? There's some liquidity in the range, but it's not super thick here. Things have thinned out to the downside considerably. If anything, if I just push this a little bit and I push this is just really to highlight, build some contrast in the chart so we can really see where the most important areas are of interest. And what we can see here is that resistance is building, liquidity is building overhead, right? We were at 40 million yesterday, and now we're in the 47, 48 million range. Not a ton, but it's getting harder and harder to break, right? And look at this, kind of a thin spot where it's easy for price to go back down to that 69 or sub 69K level. And should that break through or rug pull, then we have this range. And of course, that monthly close, if we're looking for a green close, we got to close up above this level right about here. Okay, so we got to close above this, and it's reasonable to think that could get tested before Sunday's weekly and monthly close. So looking at that, as you can see, resistance dropping down into this range here too. This it just keeps replenishing too. So that's something to be mindful of. Back to the candle chart here. As I said, we looked at this golden cross happening. Looks like it will happen after we open the new candle, and watching these levels here for the monthly close and the weekly close. And this one down here, which would be really easier to see here if we go back to the D chart, that would be our lower low that bulls do not want to see. Okay, so let me expand this a little bit. Right, so at the moment we've not made a higher high. We have gone low, but not printed a lower low yet. Right, so what we want to see is higher highs and higher lows. So we have a higher low here. will we get a higher high above our new all-time high in that 73,800 range before this is all said and done? Or are we going to get a correction and come back down and test this range? We've talked about corrections a lot before the halving. Yes, they can happen before and after the halving. I've shown you plenty of evidence of that in the past. So I'm not going to go and add those back into the chart right now, but you've seen them. You could look at any of the previous videos I've made. We've talked about that a lot. We'll revisit that maybe after the end of the month. So that's what I'm looking at here in kind of the near term. Of course, catalysts that could impact some volatility here over the next few days would be economic numbers. Today was pretty much a nothing burger. We still have another report coming in terms of pending home sales, which could be, looks like that one has actually come in already. So for pending home sales, what's that looking like? It looks like it's going up year on the month over month, and year over year, not so good. But these are things that the Fed is looking at, and the Fed wants to see weakness in these areas. The Fed wants to see weakness in job claims, and it's not happening. So those are the things that they keep saying that they want to see before they cut, and or they want to see develop more before they start to cut. And, it's just not materializing. So in the past several statements, Chairman Powell has been rather dovish, I think. He's telegraphed that they're on pace for 3 potential rate cuts this year, starting later in the year. Consensus seems to be that the first cut would come somewhere around the June FOMC meeting. But Fed Chair Powell speaks tomorrow. We got another round of inflation data coming out tomorrow, and Fed Chair Powell speaks tomorrow. So that could be interesting. Maybe he, if he telegraphs something differently, if he changes his tone or mentions a potential change in their a potential change in their plans and policy, then that could, that obviously could trigger some volatility. In terms of the ETF flows, we have seen yesterday a pretty interesting day. It was a max day of inflows for Cathie Wood's ARK Invest and a minimum day of inflows for Fidelity. So that's kind of interesting. I wonder if it just means that, maybe Cathie Wood's team was a little more proactive with their clients yesterday, and feels like we've hit a local bottom or close enough to start ramping things up back again. Meanwhile, Bitwise did nothing yesterday, and BlackRock had another good day of inflows, and Grayscale had another bad day of outflows. The point is, none of this is going to have any impact on Friday because TradFi is closed for the Good Friday holiday, and of course, nothing through the weekend. So those tend to, when that ETF faucet is turned off, that tends to create some opportunity for some pullbacks. So, you can see we've got some dark spots in the chart that, price can move through rather easily. Often around these events, these economic reports, Fed Chair Powell speeches, especially, we see some gaming from whales ahead of those announcements. And, of course, we have a weekly and monthly close coming up on Sunday. So all of that creates potential for volatility within this range. Could we see guardrails come up in terms of adding more bid liquidity up here above 69 to hold price, keep price pinned, or maybe down at this level, to protect the monthly close for a green candle? That would be unprecedented, by the way. If we did get a green candle on the monthly, it would be the first time we have seen 7 consecutive green candles, right? We've got 1, 2, 3, 4, 5, 6, 7. If this prints, would be the first time ever in history that we've seen 7 consecutive green candles. Obviously, a bit of a change since the ETF era has begun in January. So these are all factors that we're considering as we head into the monthly close here. So, in terms of looking for opportunities to buy. I'm still buying dips, right? I'm hoping that we get the deeper correction, but when you see momentum like we're seeing right now, right? If this can continue and stay outside the octagon, then bulls could continue some momentum here, right? So in terms of where we could go, in both directions, I've highlighted this, pretty much daily. We have the halving coming up here in about the third week of April, it looks like. And we have a lot of discussion about a potential 20 to 40% correction. If that were to happen, it would start from the current all-time high in that 73.8 range, and then what would 20% look like? Well, 20% would take us right to, let's see, with the monthly close is not quite 20%. 20% takes us right into that red box, an area of prior consolidation. We didn't have much consolidation there this time around, but we did spend some time there back in our run at the end of the prior bull market in 2021. We did have some time up here where this was strong resistance for a while. We broke down, we came back up, broke through it. It was support for a little bit, and then, of course, everything broke down. That was the full bear mode at that point. So obviously that's an interesting target and one that has some decent bid liquidity on it. This would be that range right here, 58 to 60 range. So that's interesting to me. And the fact that we also see this red 50-day moving average up in that range, those are all interesting targets to me. It also, by the way, is near this lower low. So, protecting that lower low would be important. Losing that lower low would make me think that we have a potential to break down even further. It's notable. I've been talking about this target for a long time, right? We had a lot of consolidation in this 40 to 45K range, 44 being kind of the sweet spot here. We never retested this area, and I expected to, right? We never got that retest down there. We broke up here. We did get a retest on this monthly close level so far, so this could potentially hold here. We'll see what happens. We've got a few days to go, and I think they could set up to be volatile days before we get there. So in terms of that happening, if we were to break down further, let's say that that we got this retest. And if it broke down, if we printed a lower low, then I think we could grind down further. The 100-day moving average is still a valid target. Moving averages always are. Whether that would be enough to hold or not, I don't know. That's at that 50 to 52K level. Seems to be some sentiment for that. Right here, we had some consolidation. And if we look on fire charts and try and find some confluence on that, we can see there's not really a ton, not really much of anything in that 50K range right now. I mean, $1 million, $6 million. There's just, nothing here shows me there's sentiment to go lower than this 58K level at the moment. Now, if price starts to break down, I promise you we'll see bid liquidity move down into this range. But at the moment, we're not seeing it. So, it's entirely possible that before we get to that Sunday close of the weekly and monthly, we could see a big white bid wall come in to any of these levels here, right? So be mindful of that. We could also see a rug pull, okay? So, what we're seeing so far is this area softening, right? We're seeing some bid liquidity leave this range. And what we're waiting for is really a solid bid to get things pushing back up. What we want to see, as we have historically seen, is the brighter areas dominating the, I'm going to take this filtering out too, so we can see the full picture here. It's most often when we see, I'll even go to the 3-year for that, when we see brighter concentration. So for fire charts, this is the color scale of fire, pretty much, right? White hot, that's the biggest numbers on the board here, right? And it's relative to every chart that you look at, right? So in this particular chart, $134 million is the highest concentration of volume, And that's what we're scaled to right now. So, but what you can notice here is price jumps from the bright spots, right? It's attracted to it first, and then it gets rejected. Okay, we had overhead way out of range, and this somehow telegraphs into pushing price down. We got another block here, push price down. We got bright bid liquidity here, push price up, and then we have bright ask liquidity, pushes price down, pushes price down, pushes price down. And so we're looking for these bigger concentrations of bids to get price moving upward solidly like we had here, okay? So this held for the moment. Right now, the upside resistance side is dominant in terms of this battle for liquidity and trend. So I do think that we're certainly on pace to continue to see price appreciate after the halving, but it's reasonable to expect a correction at any time, including after the halving. So again, if we're to extrapolate this out further, if we were to lose this, print that lower low, grind down to this 50K level, which at the moment there's no sentiment for, and then potentially grind further, we would be in that 40% range right there at that 44K level. So those are just targets to consider, all right? And I'll be honest with you, I've got bids all the way down there just in case. Just in case, I want to make sure that I'm preserving capital to put into play if we have the opportunity to buy there. Doesn't mean we're going to get it, and at the moment it doesn't look like we will. But you better believe that you need to be prepared for corrections like this to happen even after the halving, because we have history that says it happens. All right, so be prepared for that. So that's basically the long and short of what I'm looking at this point. Again, we have this what appears to be a breakout attempt here on the 4-hour, but we haven't closed the day up here. So, and the fact that we're seeing this resistance overhead is a bit of a concern that we might not break out, and we could potentially break back down into the prior range. So, keeping an eye on liquidity is helpful. For me, anyways, the way that I like to trade, there's a lot of speculation. When you look at the candle chart, you don't know if the lines are going to hold, and you don't know if the technical indicators are going to continue to be valid. They often get invalidated, especially when manipulation comes into play. And so when we're looking at liquidity, we can see straight up whether it looks like there's enough to hold in terms of support, which in my opinion, it doesn't look like there is. But what we've seen happening is when price dips down, we see bids move into place, and that's been holding it up here so far. So we'll see if that continues. We do have some buying at the moment, and that's good to see. Let's drill down to the daily to get one more view before we wrap this one. So again, looking at liquidity, you can see it's very thin down here. Very easy to fall back down into this mid 68 level or lower. And should that happen, there's just not a lot. There's not a lot of friction here to hold price from going down to the 60K level. That's what I'm looking at. I hope this helps you. If nothing else, trade smarter. Nothing I say and share in these streams should be considered trading advice in any way, shape, or form. I do hope it helps you out, and I do hope it helps you trade smarter. In the meantime, I'm going to continue to be watching the order book for liquidity placement, liquidity movement, and changes in order flow, right? If we start seeing big selling going on, I'm going to know it. Hope that helps you out, guys. Have a fantastic day.